Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening.
The COVID-19 pandemic and the conflict in Ukraine. These shocks have produced profound impact on the global economy. As if that was not enough, now we are in the midst of a third major shock.
The RBI hikes the repo rate by 50 basis points as expected. Governor Shaktikanta Das likens the current global monetary tightening to a third storm after COVID and the Ukraine war. Refuses to set an outer limit for rate hikes, saying future actions will be data-driven. The RBI also lowers the FY23 GDP forecast from 7.2 to 7%, maintains the inflation forecast at 6.7%. The central bank's projections mean inflation in September will be above the 6% mark. RBI will have to write a letter to the government explaining the reasons for its failure to contain inflation below the 6% target for 3 consecutive quarters. The rupee reclaims lost ground against the dollar, posting the biggest one-day rally in a month. Governor Shaktikanta Das says the movement in the rupee is orderly compared with other currencies. Stock markets snap a 7-day losing streak after the Reserve Bank policy. The Sensex rallies over 1,000 points. The Nifty gains nearly 300. But for the week, the Sensex and the Nifty are still down over 1%. The RBI stands firm on tokenization, refuses to move the deadline from tomorrow. All credit and debit card transactions made online will have to mask the identity of the cardholder via tokens. A litmus test for India's open network for digital commerce, ONDC, goes live in parts of Bengaluru with more than 200 grocery stores and restaurants registering for the trials. The government-backed interoperable network is aimed at helping small retailers go online and reduce the dominance of Amazon, Flipkart and others. The insurance regulator is likely to approve new regulations on expenses incurred by general insurers. Sources say the expenses of management is likely to be capped at 30% of gross annual premium. That's an exclusive. At least 23 people are dead after a civilian convoy was allegedly hit by a Russian missile in southwest Ukraine. Russian President Vladimir Putin set to formally announce the annexation of regions in eastern Ukraine in a few moments. Shashi Tharoor and Mallikarjun Kharge will slug it out to become the next president of the Congress party. Only 2 leaders have filed the nomination as the deadline expires. Kharge is the frontrunner. He has the backing of large sections of the party. All of that and more coming up for you with the top story this evening. No surprises from the Monetary Policy Committee. Repo rate was hiked by 50 basis points for the third time in a row. And this was also the 4th consecutive rate hike, including the 40 basis point hike that was announced in May. So this hike, third time in a row. With this, the repo rate has been raised by 190 basis points in April. The repo now stands at 5.9%. The committee's decision was unanimous and the policy stance remains focused on the withdrawal of accommodation. RBI Governor Shaktikanta Das refused to give an outer limit for rate hikes and said that future actions will be data-driven. In fact, he likened the global monetary tightening to a third storm after COVID and the Ukraine war. The RBI has also cut the real GDP growth forecast for FY23 to 7% from 7.2% earlier. It expects the first quarter of the next fiscal year to record a GDP growth of 7.2%. Meanwhile, the inflation forecast for FY23 has been retained at 6.7%. Central bank's projections mean that inflation in September will be above the 6% mark. And when this happens, the RBI will have to write a letter to the government explaining the reasons for its failure to contain inflation below 6% for 3 consecutive quarters. Well, here are the key highlights from RBI Governor Shaktikanta Das.
In the last 2.5 years, the world has witnessed 2 major shocks: the COVID-19 pandemic and the conflict in Ukraine. These shocks have produced profound impact on the global economy. As if that was not enough, now we are in the midst of a third major shock, a storm, arising from aggressive monetary policy actions and even more aggressive communication, especially from advanced country central banks. In a policy tightening cycle, however, it is arduous to provide consistent forward guidance, particularly in a highly uncertain environment. In fact, forward guidance may even destabilize financial markets. Questions are often asked about the peak and terminal rates in a rate hiking cycle or in a rate tightening cycle. Without venturing into any forward guidance, which can be hazardous In the present context, I would like to state that our actions will be carefully calibrated to the incoming data and the evolving scenario without being constrained by conventional or any textbook approach to policy making.
Well, that is the RBI governor, and that is the MPC for this quarter. Now, the RBI policy and some dollar weakness has given a boost to the rupee, the currency posting its biggest single-day gain in a month, appreciating around 50 paise against the US dollar, ending at 81 rupees and 34 paise. The Reserve Bank governor said the movement of the rupee has been orderly when compared to currencies of other countries. He also added that the RBI's forex reserves continue to remain strong.
The movement of the Indian rupee has, however, been orderly compared to most other countries. The Indian rupee has depreciated by 7.4% against the US dollar. The Reserve Bank intervenes in the market to curb excess volatility and anchor expectations. The overarching focus is on maintaining macroeconomic stability and market confidence. The aspect of adequacy of forex reserves is always kept in mind. The umbrella, as I had said earlier, continues to remain strong.
Well, that is the RBI governor. Lata joins us now with her take on the monetary policy. Lata, rates, rupee, inflation, growth. What did you make of the commentary that came in from the RBI?
Well, first up, the 50 basis rate hike is being treated by the market as boringly predictable. Now, isn't that surprising? 50 basis is a lot, and in India, in normal times, it would have raised heckles from political circles and from markets. But such is the turmoil in the market and the attack on the rupee that, 50 basis has become so acceptable. That stands out. Now, for the other forecast that the governor or the MPC has made, growth at 7%, perhaps is a tad optimistic. We're still living in uncertain times in terms of a global slowdown. And even arithmetically, if you adjust the much lower than expected first quarter growth, 13.5 compared to RBI 16.2, it's likely that growth is actually going to be less than 7%. I mean, that's a very distinct possibility. Inflation at 6.7 is their forecast. They've retained it. Even that could be a little ambitious. That is predicated upon inflation coming down to 5.8% in the last quarter. It's too much of a bet right now, given the way in which cereal prices have gone up. The Anna Yojana has been extended, and that can also create, a psychological impact of lower stocks with the government, and therefore keep prices higher. Veggie prices are higher. So that's a bit of an ask, that 6.7 and 5.8 by the last quarter. Governor assiduously tried to explain that he will not give any guidance. But, he defended withdrawal of accommodation by saying that that means we are still accommodative, which means there are more hikes. So December, not only is the CPI for October and September going to be uncomfortably high, higher than 7 for September and almost 7 for October. In that background, when you go into December and you have written a letter to Parliament why you failed to keep inflation under 6%, which was your mandate, it's very difficult not to do a 35 basis. So my sense is, from putting everything together, especially defense of withdrawal of accommodation by the governor, it looks like he has to remove more accommodation in December. So 35 in December perhaps is a given, and maybe even another 25 in February. If the Fed is going on hiking all the way up to March, it's difficult not to move at all. So chances are we are going to peak at 6.5.
Well, we will wait to see. The MPC meets next in December. But Lata, many thanks for joining us to decode the commentary that came in from the RBI this afternoon. Now, stock markets rallying after the RBI's decision, snapping a 7-day losing streak. The Sensex gaining over 1,000 points today, and the Nifty added about 300 points. Financials led the rally with the Nifty Bank Index gaining about 3%. But for the week, both the Sensex and the Nifty are down over 1%. Metal stocks, the biggest losers, ending the week over 4% lower. Auto and financials were also down over 2% for the week. Anuj joins us now to wrap up the market action. Anuj, closing in the green for the day, but not so for the week.
Powerful short covering is what we had today. We had the market sitting with record high short positions when trade started today. It was the start of a new series, and we had, like I explained in the morning as well, record high short position from FIIs. The bank Nifty led with 2.5% rally after the policy. So the event is out of the way, even though the event itself may not have anything extraordinary for the market, something which was priced in, perhaps. Risk on visible in all the metal names. But this is a market which is about the dollar rupee algo trade, and that's what played out today. The rupee was very strong, and that led to the bank Nifty being strong. In fact, look at the gainers. You had Hindalco, Bharti made a new high, by the way, and all the financials after that, Bajaj Finance, IndusInd, Kotak, the HDFC Twins, ICICI, even Reliance did well. In the F&O space, you had some big gainers like India Cement, Canara Bank, and Industar, while gas was a sector, city gas, that is, which was on the downside in anticipation of price hikes, so MGL, IGL, and Gujarat Gas. As I said, it's an algo trade, a lot dependent on what's happening with the dollar index and currency market. So today it was a good short covering move, but it cannot be said that a trend has emerged once again. For that, we'll need to see follow through.
Powerful short covering for the day. Thanks very much, Anuj, for joining us. But here's a CNBC-TV18 exclusive. The insurance regulator is close to approving a limit on the expense of general and health insurance firms, and we learn that a cap of 30% of the gross premium written on the company expense during a financial year could be imposed. Yash joins us now with more. Yash.
Well, discussions on expenses of management and commission has been a major talking point between the insurance regulator and the industry. Simply put, what is expenses of management? It is a sum total of two things. One is the commission paid by the insurance company on sale of its policies, and second one is the operating expenses incurred by the insurance company, like salaries paid to its employees. Now, the latest that we've been given to understand here is that the insurance regulator very recently, in fact just day before yesterday, met the general insurance industry, and there's almost a consensus which has been formed when it comes to the expenses of management regulations, which entails the limit that insurance companies will have to follow on expenses of management. What we've been given to understand is that a limit of 30% has been agreed upon between the regulator and the companies when it comes to expenses of management. 30% is of the total premium which a company earns in any given year. So if a general insurance company earns a premium of 100 rupees, there will be a limit on 30 rupees when it comes to expenses of management. As far as commission is concerned, there has been no limit which has been prescribed by the regulator, provided that the commission remains under that 30% limit prescribed on expenses of management. So which means that if an insurance company in any given year wants to spend 25 rupees as commission, it can only have 5 rupees towards other operating expenses. If it can reduce commission in any given year, it can have more money towards its operating expenses.
All right, Yash, many thanks for joining us. The other headlines we are tracking this evening: Vodafone Idea says that they have been in talks with Indus Towers to strike softer payment terms, adding that the discussions have not been concluded yet. The statement comes after we reported that Indus Towers has warned the telecom company that they could lose access to tower services if dues were not cleared. Nestle India has announced that CFO David McDaniel, who also served as the Executive Director of Finance and Control, will be stepping down at the end of February. He will take up a new assignment with the Nestle affiliate. Svetlana Boldina, currently the Head of Finance and Control of Nestle Indonesia, will succeed him. Air India is planning to expand its international operations. It has announced 20 additional flights every week to Birmingham, London and San Francisco. Post the expansion, Air India will be operating 40 weekly flights to the US and 48 flights to the UK. Now, the Reserve Bank of India remains firm on tokenization, or the process of masking identity or credit card holders via tokens. Tokenizations, remember, will be mandatory from tomorrow, the 1st of October. As scheduled, that is. RBI Deputy Governor Ravi Shankar says that the system is ready for the change, and 40% of transactions in the month of September have already been done through tokenization. Take a look.
On tokenization, the system is ready. Roughly about 35 crore tokens have already been created. As per the data we have, in September itself, about 40% of transactions were undertaken using tokens. There are a few participants who may not be ready, but that would largely be because, or probably because, of their unwillingness to comply. And we don't believe that we should hold back efforts to ensure customer protection because of such laggards.
That's right. On the eve of the deadline to implement these tokenization norms, the clear indication coming from the RBI Deputy Governor is that there will be no extension in the timeline because this deadline has been extended multiple times already. RBI Deputy Governor T. Ravi Shankar in today's press conference said that 35 crore credit and debit card tokens have already been created in the system. And in fact, as of September, in the month of September, almost 40% of all online transactions that were done using tokens amounting to about 63 crore rupees so far. He also said that there may be a few laggards who have not really adopted to the system, but overall the ecosystem is perfectly fine. It is ready to adopt to these new rules, and therefore RBI will not hold back these rules in the interest of consumers just because there are a few laggards. Now, what is tokenization? Now, essentially it means that card-sensitive details cannot be stored by merchants anymore. They will be generated in the form of a unique token, and that is all that the merchants can store. Banks and card companies who are authorized will only have access to customers' data. This is to ensure that there's protection from any online frauds or hacks for the customers. Now, the timing of this deadline, the 30th of September today, is interesting because merchants are worried. They're right in the middle of the festive season, and if the system is not ready, which they're not very confident of, then transactions could fail, and especially on the recurring payments, there is concerns which could hit some of the small businesses. In fact, the Merchant Payment Alliance of India, who we spoke to a couple of weeks back on the show as well, had expressed concerns, said it had written to RBI twice over to ensure that banks and payment gateways demonstrate their readiness before the system moves to it. But if today's comments are anything to go by, it looks like come tomorrow and the rules will come into force.
Yes, so prepare yourself for a change from tomorrow. Ritu, many thanks for joining us. We will head into a break. But up next, Shashi Tharoor and Mallikarjun Kharge will slug it out to become the next president of the Congress Party. That and more when we return. A quick check of the national headlines. Shashi Tharoor and Mallikarjun Kharge are the contenders for the next president of the Congress Party. Kharge is the frontrunner as he has the backing of large sections of the party, including senior leaders. A third leader, former Jharkhand Minister K. N. Tripathi, also filed his nomination. The polling will take place on the 17th of October. Results will be announced on the 19th.
I represent a vision to take the party forward in a different way. The party has had some great successes in its storied history. But for some years now, we have been suffering setbacks. And the question is, how do we stop those setbacks, change the narrative and move forward? So I want to say to all of you, I am here to be the voice of all these party workers. And I hope that my campaign will appeal to them and will represent a way forward for the party.
मैं जो लड़ाई हमेशा लड़ते हुए आया हूं और लड़ना चाहता हूं कि कांग्रेस पार्टी के जो उसूल हैं, जो आइडियोलॉजी है, उस आइडियोलॉजी के साथ मैं बचपन से जुड़ा हूं। मैं यही अपील करूंगा सारे हमारे डेलीगेट्स जो वोटर्स हैं वो मेरे पक्ष में ज़्यादा से ज़्यादा बहुमत बनाकर मुझे जिताएंगे, ये आशा करता हूं।
Well, it looks like Mallikarjun Kharge is all set to take over as Congress president. Russian President Vladimir Putin will make a formal announcement on the annexation of 4 regions of eastern Ukraine. The UN has warned that these annexations are a dangerous escalation and jeopardize prospects of peace. At least 23 people dead after a civilian convoy was allegedly hit by a Russian missile in southwest Ukraine. And as Putin readies to annex 4 regions of Ukraine, there are many towns where Ukraine was able to hold its ground and, in fact, push back the Russian troops. Kharkiv is one such region. But even as they are liberated, the horrors of the invasion loom widely across the town with a constant fear of Russia attacking them once again. Our colleague Sanjay Suri gets us the latest from Kharkiv.
So are you feeling proud?
Of course.
Why are you proud?
Because we're taking back what's ours.
And was it a difficult fight?
Of course.
Kharkiv has been the most intense battleground of this war by far. It's been attacked, it's been shelled, struck by missiles again and again since the launch of the invasion on February the 24th. all that has appeared to have ended in Ukrainian victory now and the liberation of Kharkiv, supposedly following a major counter-offensive by the Ukrainian military in early September. But just 2 days back, on Tuesday this week, the city was struck in missile attacks that destroyed a power facility, leaving about 18,000 people without electricity. The liberation of Kharkiv has been much celebrated, but there isn't anyone here who is not keeping fingers crossed. And behind here, the Opera House was hit in a missile attack, and across from it, the business center absolutely destroyed. And this another building, home to a number of offices and businesses, bombed beyond repair, it seems. The most intense firefight of this whole campaign in Kharkiv took place here in the Soltivka area earlier in September. This is where Ukrainian soldiers launched that strong counterattack against Russians who were in the city. This is where Russians were cornered. They were cornered into a building, surrounded. They had to abandon a lot of their vehicles, their armored personnel carriers, their tanks, and they fled. This is the point, really, that has been the turning point of the Ukrainian offensive and their counteroffensive against the Russian forces so far.
Well, Sanjay Suri there reporting from inside Kharkiv. And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Stay tuned. The news continues on the other side.